JB here, JB here. Let's get this up. Hope everyone's doing outstanding. August 7th, 2024, 8:54 on this fine Wednesday. Talk really quick about the market, some of the names I'm looking at, and go from there. But take a look at the S&P futures. Look like we're going to rally here, up over 1%. NASDAQ futures up 1.3%. Overnight, you had the Bank of Japan kind of rolling back comments around their monetary policy. There was concerns last week raising rates uh, is probably doesn't do well because folks who have been banking on holding. Let me see if I can get the mute button on here because I can't do it. There it is. Who have been banking on holding uh, th- things in the yen currency and then using those assets or equity to buy U.S. stocks or other things that might return better, have better returns, have they got destroyed, right? They call it the yen carry trade. Gosh, I remember. I mean, there's so many things over the years that you have scenarios that play out, and I forget what year this was, probably 2012, 2013. UPB is away this week, but he would probably be able to add some more color. But it was the Swiss franc, right? That was always it was it's a I wouldn't call it manipulated, but it was a constant. It was at a constant price, right? It was pegged. The Swiss franc was pegged, and then one night they decided we're not going to have our currency pegged anymore, and they just let it free float, and and people got destroyed because you're holding a position that you think is there's zero chance that it's going to fluctuate in value, and you're using that to get some other return on your investment, and then all of a sudden they the Swiss central bank or whoever it was came out and said, oh, we're not going to peg our currency anymore, and boom, things got destroyed. So not the same story here, but I remember back then I'm like, wow, people are going to get blown up, the market's tanked, the future was down like 2 or 3%, and then it's one of those narratives and stories and scenarios that just eventually just it's not a story anymore, right? Markets eventually found footing, um, returned to levels they were before that incident, and then just kept going higher. Not saying we have the same situation here. There's a lot of different moving parts right now, but rants for other days too. In regards to Japan, they had their lost decade of growth. They have a slowing population growth. So how are they going to really extract GDP growth? Right. The only way you do that is more people or more productivity. And so anyway, rants for other days. But hopefully we find some footing here. Asia markets up overnight. Europe markets rallying this morning, and it looks like you know will recoup more of the losses from Monday. Take a look at some of the support resistance. I put 527 on the SPY and 522. 522 is kind of my line in the sand for the SPY. If we break under that today, I'll look for some inexpensive speculative hedge positions to at least offset uh, any losses. So that's kind of the plan today. I hope I don't have to move forward on the plan, but that's kind of if things do start to pull back. Those are the kind of areas I'm looking for, especially on the SPY. Take a look at the IWM, and it's almost like a beautiful chart because the IWM went up and tested a 200-day moving average on Monday, and then on the reverse went up and tested a 50-day moving average yesterday. So both areas provided some kind of resistance or support on Monday, resistance yesterday. So kind of some good chops, almost like I mean I hate to call it healthy chop when an index is as volatile as small caps have been, but take a look at the IWM chart, pretty impressive. So you would love to see small caps over that 50-day at 207 and change. Gets over that today. I think that bodes well into the end of the week. And then there's not much in the way of catalysts. It just continue to be earnings, and there's not a lot of huge earnings on tap. We had Disney this morning. Disney reported earnings that actually bested estimates. They posted their first profitable. It's the first time their streaming service posted profits, but the stock it gapped, moved higher after the report, and then sold off. So we'll see how that all plays out. All right, so individual names. First, I'll talk about Clear Secure, and I did my rant yesterday afternoon. Really like this one for more upside. You take a look this morning, more analysts adjust, well, not adjustments, but just reiterations. You have Needham coming out reiterating their $40 price target buy rating. You also have Telsey Advisory Group coming out, outperform rating $34 price target. And if you take a look at Clear Secure, it's trading at 24 bucks. So a pretty, uh, I mean, it's substantial price targets estimates there for analysts. So for some upside, I put it. I think I did my rant when I talked about on a rant yesterday. I One of these quarters is the quarter. It's finally the bear case is over for Clear Secure. The bear case that the moat around their business is not enough to allow them to continue to grow like they have. And if you look at their numbers over the last couple of years, their compounded annual growth rate, all their metrics are double digit growths. And you go back 5-10 years, it's triple digit growth rates. Not only that, they're throwing off so much free cash flow. They do special dividends, they do stock buybacks. Uh, so I mean, it just they don't they have so much money they don't know. I shouldn't say that they don't know what to do with, but any good company, once you're at the point where you, you're a publicly traded company, so your job was to raise, you're using that as a vehicle to raise capital and to grow. And once you're at the point where your growth is enough to sustain and your cash flows is in excess of that, then you start returning shareholder value. So it's a great sign. We'll see what happens here today. Typically, when Clear reported earnings, it would be a beat and raise, and then the stock would sell off after earnings. So that's some of the reason why I got some calls yesterday. If it holds gains today, it trades maybe over 25. I'll look to get some later date strikes there. ENVX, not going to talk too much about that. Such a divisive name. It's if I tweet or post anywhere, I am just under a barrage of private messages, emails of folks just name calling me. Right? They, the CEO under the recent 10Q, I think it was June 12th, he filed a 10(5)(b)(1) plan to sell 25% of his holdings. Uh, he 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 has to wait till January because those holdings, they don't all vest, right? His contract or his deal with the company is $16 million compensation or $17 million compensation plan is stock that vests over time, right? If you're a good company and you want to get good leaders and you want to keep them, the best way to keep them is make sure that when you do give them compensation in the form of stock, that stock vests over many years, right? So here's the CEO. I guess in January it'll be 2 years, or is it no, maybe 2 years. His stock vests, or some of it, more of it does. And in the 10(5)(b)(1) plan, it says he's going to sell his stock in 6 months from now is January. So he's going to sell, it's a 25% of his holdings. Some of it hasn't vested yet, but once it vests, he's going to sell it. It's like crazy. So I don't want to get rants there. They have their factory tour. So if you know the whole backstory, here's a company that's lost over $700 billion since inception. And their big factory, the big news is they have a Malaysian factory. They laid off 30% of their workforce in Fremont, which is across the street from the Tesla factory, to go and do a plant in Malaysia. But they couldn't pony up or fork up the cash to get this factory. So they had to go and partner with some Malaysia company that does different. They don't make batteries. They make other components, electrical, manufacture, cardboard, just crazy stuff. So ENVX, $30 million was given for the factory, and 70 million was given by this other company from Malaysia. And it's funny because the CEO of ENVX has connections in Malaysia, and that's pretty much how this deal happened. So here's a company that supposedly is going to redefine batteries for the next generation. They have the best technology and what have you, but they have to go and get some Malaysian company that loses money to pony up 70% of the investment to make a plant. And not only that, this Malaysian company has to actually staff the plant. But anyway, looks great. I saw some YouTube videos. They're going to do a public tour tomorrow. I'm sure it's going to be great stuff. Maybe there'll be some folks from Samsung there. There'll be speculation. But I posted yesterday. It's right at the 200-day moving average. I think if it can't hold that back into the single digits, I'll continue to look for opportunities there. I'm not going to do too much of a rant there. Dell. So I mean, super micro, great earnings after the close. A little miss on the EPS, but then they raised guidance. But then there's concerns around Nvidia and possibly, is there going to be a log jam in regards to their new processor or what have you, and then you see the stock selling off here in the pre-market. I think these might bounce. So, of course, I'm bullish biased on Dell. So when I look at Dell, I'm like, oh, it should be, it's been cut in half since the end of May. But I think there's an opportunity here to play for a bounce. I do have the 105 weeklies. I locked some of those in already to cover costs for over 100 for 100%. I may look for some more strikes here today for a bottom bounce. And I've never traded SMCI. Don't be surprised if you see me look for some inexpensive strikes to play that one for a bounce, because I think if you look, numbers are great. I think this pullback is somewhat overblown, so don't be surprised if you see me add calls there. So that's that. Turns Pharmaceuticals. So the irony. So Turns came out with their earnings, and earnings is not uh, the great word to describe updates from biotech companies, right? Quarterly basis, Turns has to issue earnings, but the earnings is just pretty much how is our studies going? How's our cash position? Do we have enough cash runway? Are we gonna have to raise capital? Those are like the big important key points on these early stage biotech companies. But Turns came out, they gave up more specifics in regards to their GLP-1 oral data, which will be out in September. They also talked about the cash runway well into 2026, and then they spoke about just early information on their study, that there's no adverse effects, no one's dropped out of the study, which is huge news in my opinion. Despite the fact stock all the way up into the eights after the open, then faded, closed down over 2%. And that's despite another analyst reiterating their price target. So if you look at the analyst ratings, I'm not going to go into too much detail, but BMO Capital, they have an outperform rating, $19 price target. Turn closed at $7.12 yesterday. So the analyst ratings, price targets, it's not the be all end all, but just shows that the potential for where it might trade, especially if they have positive GLP-1 data in September. So I'll continue to look for opportunities to add some October strikes. I was looking at some October strikes after the open yesterday, and the premiums were nuts. So hopefully a little more premium creeps out here today, and I'll look for some October strikes. Not much to add here on Twilio. Just disappointing all the way up to 61 after the open yesterday, and then just pulled back. No news, no catalyst. I'm surprised considering how it performed after its earnings last week, and that was despite the market pullback. Have to think this trades up near 64, 65 in the coming days. So I'm not going to add anything just yet, but I'll continue to look for opportunities to play that one. I'm trying to think of some of the other names here that I'm looking at. I put in a watch list. If we do get some kind of reversal today, if we get some selling, if we start breaking under 522 on a SPY, uh, Palo Alto, PANW, I'll be looking at LRCX puts, and also Broadcom. Just typical names that I look for hedge position. I was talking about on the rant yesterday afternoon. It's not that I don't think these are great companies, that probably 5-10 years from now they're going to be much higher than where they are now, but they just offer great risk reward opportunities on pullbacks where you have the S&P or the Nasdaq's down 1%. These names probably have lower implied volatility, but once we sell off, if they move 1 or 2%, the puts are 2, 3, 4, 500%, if not more. We saw that last week. So I always say always be hedging. That's kind of what I'll be looking at. And that's it, folks. Jackson Hole in 2 weeks. So that's probably going to be very important. You still have some chatter around this emergency that maybe there'll be some news over the weekend that the Fed's going to have an emergency meeting and they might do an emergency rate cut. I almost think if they do that, that would be almost like telling the market, hey, we're concerned, right? You want people to panic, right? So for me, just hold the status quo. Wait for your meeting. I think it's in 35 days. Just wait for it. Talk at Jackson Hole. Powell, if you're Powell, just make the market aware just make the market know you're aware of what's going on. You're still sticking to your mandates, and just keep cool heads, right? Because I think if you go out, and especially you just don't want to see it over the weekend, but you don't want the Fed to come out and say, oh, we're having an emergency meeting. You just don't want to see that, because I think the market will just not react very well to it. So that's it, folks. 22 minutes to the open. Let's have a great day. I'll be back on audio later. Rock and roll.